What's going on, everybody? We are not muted this time, so away we go. Hey, it's Sunday afternoon, and I wanted to do this one. I wanted to get on and talk with you guys about something that's concerning now. This is, sorry, ran downstairs. I'm all in a hurry to get to talk to all you people. I'm so excited. So I'm in a little bit of a pickle here, thinking about PepsiCo. I've got a lot of thoughts to share with you, and I'd love to hear your guys' thoughts, but yeah, unfortunately, um, my wife's uncle passed away, so I have a wake tonight, a funeral tomorrow. So I just wanted to have our little weekly Sunday communion with each other where we can talk dividend investing and talk about stocks and, some things that are going on. Frank, good morning. Thanks for joining me. So, for those of you listening on the replay, I will be back to regularly scheduled Sunday evening next week. And yeah, thanks. And it's just one of those things. Oh, by the way, for all of you, those of you, community member Ari Gutman, talk to him, and yeah, he's not good right now with all of the situation going on in Israel. He sent me a little video that there was right by him. You could hear rockets going off, just crazy. So it just goes to show, puts things in perspective how, I talked with Dividend Dave this morning. I did a little thing with him for his channel. And one of my thoughts was, if it can happen any day, it can happen today. So every day we have to try to not take it for granted. I know it's easier said than done, but honestly, it's not a pleasant thought. We all have an expiration date. We just don't know when that's going to be. But we need to make sure that we are living each day to the fullest. And, this investing game we play, we're so fortunate that we can be on and worrying about, is PepsiCo, a stock that I own 100 shares of, going to cut its dividend when people in the world have real serious problems? So I just wanted to say again, send well wishes to those out in Israel and to our friend Ari Gutman. And hopefully everything will get sorted out rather quickly. And a lot of this, unfortunate human nature of war and whatnot will just, I guess this is why, like they say, to secure peace is to prepare for war, right? So it's just an unfortunate reality, and tying this back into dividend stocks, so are businesses that are always in a war of their own to stay relevant and to innovate and to keep trying to just keep trying to go on. So I have yeah, Matt, it's interesting. We can talk about whatever you guys want to talk about. I'm going to give my little spiel here with PepsiCo. But first off, I heard back from PepsiCo. I'm going to hide myself there. So if you guys remember, I emailed PepsiCo and asked them, like, what's up with the elevated free cash flow payout ratio, as I'll show you. So I tried to make this as big as possible, but they basically told me that over the last few years, our senior management team has prioritized increasing investments in our business, their capital spending for incremental manufacturing capacity, supply chain investments, and IT upgrades to modernize our company and accelerate revenue growth. These investments are critical for the long-term success and competitiveness of our businesses. While I cannot provide you with a specific future projections on this topic, I can assure you that paying and growing the dividend is an important priority for us, and we have raised the annual dividend for 51 consecutive years. We calculate the annual dividend payout ratio to be around 70%, as it is calculated by annualizing our quarterly dividend and dividing that by our annual core earnings per share. And that is a dividend payout ratio level we are comfortable with. We hope this answers your question, PepsiCo Investor Relations. So that was what I heard from PepsiCo. It took them about a week to get back. So I'm going to get into it with you a little bit over exactly, Shamir. I love that thought. I'll just throw this on real quick where you said they can manipulate earnings. I love that thought. And this is where I'm actually at a pretty big not crisis moment, but when a free cash flow payout ratio exceeds 100%, that means they're either having to dip into cash reserves, they'll have to take on debt, do something to pay out that dividend, because the dividend is paid out from the free cash flow, right? From that free cash flow, they can pay a dividend, They can buy back stock, which is a little bit of, that's a return of capital to a shareholder. And in a way, like Warren Buffett would say, right, that when a company buys back stock, and even if they don't pay a dividend, that's almost like you deciding when you want to take that dividend by when you sell those shares. So they can pay a dividend, buy back stock, carry it as cash on the balance sheet, or pay down debt. And debt, as we see, is a really, really important thing in this rising interest rate environment. So a lot of debt-laden companies are kind of getting, punished by the market for carrying so much debt. So I want to show you guys a little bit on, let me share it here, a little bit on Simply Safe Dividends, because I like how they have the 10-year history. And, as I don't want to say it like that. I joke around. I say, as our Lord and Savior, Warren Buffett, likes to share. Let me go on there here with you guys and make this just a little bit bigger. So here's PepsiCo. Let me go zip to the top. On simplysafedividends.com is what this is. Now, they give them a safety score of 93, which I think they might want to rethink. Dividend yield 3.16%. And we see my shares currently. I got those, where it is, 100 shares at, and I have a thing to show you guys. I have my own little PepsiCo adjusted. Oh, we'll get into that right quick. This is something I made up for PepsiCo and redid it this morning. Current share price, $160. That current dividend yield, 3.16%. Now, my average share price is $150.37. Crazy to see that we're in the 150s this week. I have more on that, why I think that happened. But the dividends received so far since that first share of PepsiCo we bought has been $1,008.96. The options income, how did I make this so big? Options income, we've sold some options, $256. So when we add that together, divide it by the 100 shares, we get $12.66 per share. I subtracted this from my average share price, and I get $137.71 is my adjusted average share price cost basis. This is kind of like how companies fudge them. They can do things like this, right? The non-GAAP, I guess it would be, for our yield on cost of 3.67%. Now, back to PepsiCo. Oh, you guys didn't see that. All right, let me do this. So my apologies, all y'all. Let me share the whole screen this time and not just the one window. Yeah, and by the way, yes, PepsiCo is going to be reporting earnings. This is what I wanted to do. I wanted to share the entire screen. So here's what I was talking about. So you guys heard me jabber-jawed as you saw me reading my screen here. So I won't go through it, but there it is. Adjusted average share price of $137.71. I see myself blocking that a little bit, but you guys get the idea. I just took everything we've earned through dividends and options, figure that out per share, and then what that works out to. So back to PepsiCo. What we got here is dividend growth, 11% CAGR over the last 20 years, which is pretty quick, right? So that's all good. 10% dividend increase was February of 23. So they don't have in that one that they just did, right? No, I guess so. Yeah, anyway, belay my last. That dividend yield is currently 11% above the 5-year average. And I know I've heard Harris Elliott talk about dividend yield theory where you look at the 5-year average, but again, that's backward looking. That's not telling us anything about the future going forward. The forward PE, 20.6. So as you can see, it had been way up there with these, my mouse won't show, but yeah, up there with these spikes. It had been around 28, 29 PE, paying $29 for every $1 of PepsiCo's earnings. So just a little bit high, I think. And there you see, just buried at the bottom of the 52-week price range. So here's what's got me worried. Earnings payout ratio, currently 65%, and they were looking at the quarterly. And I'll show you one thing that I'm not exactly buying it with their. So what that email said is, you pointed out, Shamir, is that they're saying that they're spending more money on IT, on supply chain, upgrading manufacturing capacity. So it's because they're spending more to grow the business and grow the future revenue that it's leaving less free cash flow. So currently, now 2022 was 111%. Last 12 months, 113%. Analysts, now granted, the next 12 months obviously hasn't happened yet, but they're expecting 130% free cash flow payout ratio. That's no bueno, people. That is really, really concerning to me because they're paying out way more than their free cash flows we talked about for that dividend. And that is just not sustainable going forward. And we do see the free cash flow per share rose a little bit, but it's not at that, was it $5.06? I think we said. Yeah, $5.06. So right there. Annual payout, $5.06. And the free cash flow per share, currently $4.16, not covering it. 2021 was exactly $5.06, what it is now. So that's sales growth. You can see these numbers. I won't spend too much time on this if you want to pause the screen. But shares outstanding, they're slightly buying back, not really much. I would actually hope, I'm going to be really interested to hear on Tuesday, I would hope that they're really starting to ramp up the share buybacks, just like I'm going to be looking for with Nexstar Media. When the stock price is down, this is when they need to be buying back shares, unless they have a lot of debt. Then I think I would rather see them paying off the debt. But return on invested capital has always been in the high teens, low 20s. Return on equity, nice. That obviously can be influenced by debt. So, if you have a lot of debt, from what I understand, that can manipulate the ROE. But free cash flow margin, you see, it's just been coming down since 2015. And net debt, 68%, which a little bit high, as you can see. This is simply safe. They like to see 65. So I will jump back with you guys in a second. Apparently, though, they still have plenty of operating income. So this 21-24, the interest coverage ratio you see here on the screen, that means that the last 12 months, Pepsi has had $21.24 of operating income to cover every $1 of interest expense. So they have room for paying more money on that debt. But what I want to show you, why I think I could be wrong here, looking at myself blowing that up. This is PepsiCo on the 1-year chart. And they really, they hit that all-time high on May 12th of 2023, and then they came down. $191 is when they really, so the end of July, early August is when they really started coming down. Well, check this out, all y'all. Remember, end of July, early August. So this is the 10-year treasury. When did it really start spiking? Kind of around here. So we're in July 21st, 24th, 25th. Ooh. Make it bigger for those of you that may be older on mobile. So there we see is that as the end of July, right? Remember we said end of July, early August, the 10-year yield started climbing up. And as this has gone higher and higher and higher, what has PepsiCo done? It's gone the opposite direction of the 10-year. So this may be trying to force causation into correlation, or however you say that. But I'd love to know from you, do you think that the bond proxies like PepsiCo, Coca-Cola, the REITs, the utilities, that people that want that income had bought those, and as they can get that risk-free rate, maybe they don't care about the principal gaining. They just want that income, that passive income. And as we see the 10-year creeping toward 5%, which is, what was it now? We said it is, I'm stuck in the 4.80% as it's creeping toward. And I don't know when, let's see, the last time it's been that high is, what do we got here? Right here. The last time it was that high looks like March of 2007. The last time it was at these levels. And geez Louise, look at that. July of 81, it was almost 16%. That was Volcker and the whole, that we won't get in it. But, and the last thing I want to show you before I get back into chat here, and I thank you so much for being patient, and I hope this has been helpful to you, this little foray through this, is when we look at the financials. So nerd out with me for just a minute here. When we go into the cash flow statement, and yes, we're in quarterly. So they said they're spending more for growing the business, right? So if we look at CapEx, which is what that's going to be, as you can see in the little bubble there, the little square bubble, it's outflows towards the purchase of plant, property, and equipment. So what you want to keep investing in the business to keep it growing. They currently, June was 932 million, March 581 million. We go back to last year, they spent more in June and about the same. So it looks to me, and then December is the high spending, 2.6, 2.3. So yeah, they are spending a little bit more. But as I look at quarterly, it's not like off the charts. It's not crazy. And let me see what happens. I probably should have did this beforehand. Switch to annual. Oh, by the way, if you do want to figure out the free cash flow, very simple. All you have to do is take the cash from operations. So that's like as if you owned a lemonade stand. That would be the money you'd have left over after buying like the lemons, the sugar, the cups, things like that. That's your cash from operations. So you take this number and subtract the capital expenditure, and then that is your free cash flow, and then divide it by the shares, and you can get out a free cash flow per share. So cash from ops minus CapEx, your free cash flow. And CapEx has been, I like these going back to 2018. So it's 3.2 billion, 4.2, 4.2, 4.6, 5.2, 5.2. So that's why I'm saying it's not anything crazy. It's not like they're spending 2 billion more, and that's what's really eroding the free cash flow right now. So that is my whole spiel, and I'll give you an intrinsic value because I was looking at that too. Alpha spread, again, we've talked about intrinsic value, the shortcomings and whatever. So grain of salt. They give base case $164, 2% undervalued, and on the worst case, 5 years of negative growth, $135, $136 for intrinsic valuations on PepsiCo, and this handy dandy valuation for them. The red shows when it's been overvalued, and the green shows undervalued. So according to Alpha Spread, PepsiCo has not been really undervalued. There was a little period there, and this only goes back to 21. So anyway, take that for what you will, and I'm going to stop this and get back to all you lovely, beautiful people in the chat who This is the thing. I need two monitors because when I'm showing you guys all that stuff, I can't see the chat unless I put a pop-out screen, but then you would be able to see that. So I'd like to know, what are you guys buying? What do you think? Do you think I'm off my rocker that as the yield has been climbing up and up, and then as it really spiked this week, that's when Pepsi had like the biggest drop, and it has been dropping. So I'd like to know what you guys are doing, what you're thinking, what you're looking at. What football games are you watching? No, PepsiCo is not part of the Coca-Cola company. You may be thinking of maybe they had a partnership with a product or something at one time, but yeah, no, that's pretty much, from what I understand, that's like enemy number one around PepsiCo HQ. Yeah, Ray. Ray, yeah, you want to buy Coke so bad. Dude, now could be a good time. They're coming down. Like I said, those price to earnings ratios they were overvalued. That's why I wasn't buying any more PepsiCo when it was almost a PE of 30. That's pretty dang high. I'd like to know what you think about that. Hey, Jude. So do you think that these weight loss drugs, I was listening to the Morning Brew podcast, which by the way, I really enjoy Morning Brew, and I'll be putting the newsletter out hopefully later today. Because of our current situation, I may not get it out until tomorrow. But yeah, I have a sponsored, not sponsored, but presented by Morning Brew. So I'd recommend using that link. Click on that. And they were telling that they think the weight loss drugs like Ozempic and Wegovy, that things like this are really going to curb people's junk food appetite. And that's really going to put a damper on Coke and Pepsi. But remember, these are all living, breathing companies. They're all living, breathing entities. And they're going to do what they have to do, just like Ramon LaGuardia, the CEO of PepsiCo, had said that they non-sugar is king. He put that out a while ago. Nice. Benny, what's going on, Benny? Bought some PepsiCo. Oh, and you decided against it and instead picked up some more McDonald's and Lowe's. Yeah, McDonald's has been coming down as well. Coca-Cola had Fanta, Pepsi, 7 Up. No, Coke has Fanta and 7 Up, I believe, but definitely not PepsiCo. Yeah, that's unless something crazy happened since I've gone live. But yeah, they're reading what you said, Shamir. No, I do want to see an uptick in, I haven't looked at their debt, when the debt is coming due, when they're going to have to refinance that, or if they're just going to start paying it off. But yeah, that's fine, man. No, we're all learning and we all have our thoughts. So that's part of what I love about this community. I'm still learning along with you guys. So if I say something wrong or make a mistake, please correct me, challenge me on things. I love it. Let's see. What do you have to say, Benny? Bought some more McNaught. Yeah. Deja vu, man. I was like, I think I just read that. Bean count. Hey, what's up, man? I think you are one of my accountants, right? Bean counter, which that makes sense. I don't know what the 811. That's either your area code or 81. I was thinking could be a birthday. Either way, I like trying to figure out people's names. Buying or their avatar name, whatever it is. Buying REITs, UK banks. That's really interesting. I had not considered any UK banks. I'm not aware of any. I do own Toronto Dominion TD. That's up there in Canada. What? Please do. Pray tell, what banks do you own, and what do you guys think? Like, of course, now, yeah, I wish I would have sold PepsiCo if I was psychic when it was at $195, but that was going to be one of my long-term holds. Never sell, buy and hold forever. But when I started buying, that payout ratio, that free cash flow payout ratio, was not anywhere near it is. So this is literally a lesson you're watching in real time of what am I going to do. And it's violating one of my rules. I sold Advanced Auto Parts when I saw their free cash flow payout ratio spike up. That turned out to almost be like one of my best moves, was selling Advanced for a small gain, and then they just plummeted. I think it was like 208, 210, somewhere just over 200. I sold them. Now they're in like the 70s or something like that. Oh. Ramon Laguarta, although he is not Count Duarte, Joaquin Duarte, he's our friend from Johnson & Johnson. He's the CEO, and it was on a podcast. Every time I listen to Joaquin Duarte, I think he sounds like the Count from Sesame Street. So you think the diet drugs will be like ChatGPT killing Google? Oh, I don't know, man. Wait, not actually hurting the business, just the market. Yeah. Well, it's the latest and greatest thing, but people still want that comfort food. Maybe they don't buy as much. Could be better. We don't want everybody getting diabetes and checking out early. We want people to stick around. So that's also been one of my evolving things that my wife and I were talking about with Altria, which we own, is that her and I have both lost loved ones to lung cancer from smoking. And man, we just, we think about things like that, where trying to separate the money coming in, and it's a net negative on society, tobacco use, right? Like, it harms the end user. I don't think you can smoke 3 cigarettes a week and call it healthy. It's healthier than a pack a day, but I think I said good morning to you, Kevin. So good morning. Thank you. I think I was supposed to answer something for you. Remind me if I did or didn't. Yeah, McDonald's, they're going to be fine. I mean, I think they'll might be dented a little bit, but I think those yield. I think the big thing is just the bond proxies. I think it's just a really simple decision, right? Put yourself in the shoes of an investor who has, say, $50,000, and they're saying, look, I don't really care if this $50,000 grows, but I want to earn some money off of the 50K. So if you are in that frame of mind and you see a 10-year treasury, you can lock in at almost 5%. And then you had that in, say, like a Realty Income or a PepsiCo or a Home Depot, something that looks solid. Like that's that equity risk premium that they call, right? I think. And you have no risk. Like that is a 4.8% risk free for 10 years. So, yeah. Take a breath there. Take a. I think these companies will adapt to the weight loss drug stuff. Good, Shamir. I think so. Do you guys meditate ever? Does anybody meditate? I've been having anxiety lately. I don't know why. I actually feel better now I said that. Like I started feeling that like there's so much I want to do. There's so much going on in my life and in the world and on you guys and YouTube and everywhere. And I'm just like, sorry, I don't have enough. My brain's like running in 50 different directions at the same time. And it's like, take a breath, like it's an infinite game we're playing, Yeah, so you do think he sounds like Duato. Count Duato. I don't know what that is, but let's see. What my pet position? Oh, thinking about it, Kevin. Yeah, Kevin, thinking about it. Nothing quick. I'm trying to be very unemotional about it, which is easier said than done. And I think we can all be better investors if we try to be less emotional. If we try to be less emotional, people are like, congratulations, Mr. Dapper Dividends. You've confused me. I'm not exactly sure what you mean. No, if we are less emotional about our investing, I think that is going to be better. And for me, when I look at stocks and I see free cash flow payout ratios over 100%, it's a huge red flag. But because I've been with Pepsi and it's like one of my core positions, I'm more attached to it. And I'm like, well, I plan on holding this forever. And it's PepsiCo. They're a giant. Like, they're going to be okay, right? So you are the accountant. Let's see. BGEO. Yeah, I don't know any of these. So HSBC, what is that? Hong Kong Shanghai Banking Corporation, right? I think. Don't know CBG or NWG. CBGB never got to go, unfortunately, but okay, so part of the FTSE 250, which is, UK stocks. Okay, man, interesting. So everybody, do you own any of those? That's an interesting pick. My average cost on PEP, I'll show it again this time. If you guys are just tuning in, any of you that just popped on, I'll show you the little handy-dandy sheet I made here on Google Sheets. And it is let's see, make it all in one screen there. So the current average share price for us, our cost is $150, but I did this adjusted. This is like the non-GAAP, right? So real quick, once again, I took all the dividends we've received since day one, all the options income, figured that out, divided it by 100 shares, which we own, 1266, and then gave that as my quote unquote adjusted average share price, and then the adjusted yield on cost. So, not GAAP, I guess, not generally accepted accounting principle, but yeah, so there you go, $150 on those 100 shares of good old Pep. Good old Pep. But not Gammy Num Nums. Anyone remember that movie? And a buddy talking about Gammy Num Nums. I can't say it. The weather. The temperature dropped so much here in Chicago since Friday morning, and all of a sudden, as soon as we get that fall weather change where it just drops quick, the old sinuses get stuffed up. But here you go. REITs, infrastructure, and life sciences. Nice. Who's a big life sciences one? I think Ryan was in Kilroy, right? I think KRC has a lot of life science exposure. O is just too good to pass up. Yeah, I agree, man. I've slowly been buying more O, and I probably will continue to do so. Coke's yield looks pretty attractive. What is their yield? What is Coke's yield? Let's, Benny, because I like you, before I do that, thank you for sharing that. Do you know I've tried meditating for like 5 minutes a few years ago, but I think it's just part of that proper life, uh, proper diet, proper nutrition, proper sleep, a little bit of whiskey on the evening, the weekend evenings, and meditation. Okay, maybe one of those they don't recommend, but yeah, I try not thinking sometimes, dude. You guys are great. I know this isn't gonna speak to a lot of people, but this is life. Like this is just real. Like I am literally just like any of you. I work a job. I am trying to become a better investor, learn, make mistakes, and also learn how to be a better content creator for all of you guys out there and all of us, honestly. So, yeah, this is just a phase of life, man. Something we got to deal with. Okay, what were we going to do? I was going to show Benny. I was going to show you PepsiCo on Simply Safe because I want to see. Oh, I have a great point. I have something really cool to show you about PepsiCo, and I think you're going to like this, my dividend investing friend. Let's go back to the tippy top, and we'll put in. Oh, we didn't do news. Hold that thought, Benny. I know Steve's not on, but we do a little bit of news around here. What was Monday? 3rd, 2nd, 29th. Here we go. So again, this is all Simply Safe. Not going to go through these articles. They downgraded Walgreens, their borderline. They downgraded their dividend safety score from 50 to 40 unsafe. Look at that yield, 8.8%. That's about as much as Altria, Walgreens is, and that's sky high above their. I think that dividend's going to get cut. I'm sorry. I think they got to cut it to pay down debt. We can look at Walgreens later if you guys want. Yeah. This is an interesting one. So Kellogg's split into two, became Kellanova and I think WK Kellogg or something like that. So did you get any of that? Let me know. First Long Island, FLIC, ticker FLIC, has held their dividend flat for the first time in at least 30 years. This is another red flag. We almost went through it with Lockheed Martin. They were like, I think a few days or almost a week late in raising that dividend. So you can see for 30 years, they kept raising it. And then all of a sudden, like as Mike, the dividend guy says, they forgot to raise their dividend. So yeah, they definitely forgot to raise their dividend. So that, if you are an investor in First Long Island, you might want to look deeper into that. Refresh their outlook on Stag. Simply Safe is just, which there's that logo up there. Simply Safe, from what I understand, is 3 dudes, and one of the guys' wives does some of the design or back end or something, but it's just 3 of them. There's no algorithm, and they give all these ratings by themselves. So Brookfield Oaktree Wealth Solutions, ticker, I don't see the ticker here, but Brookfield Real Assets Income Fund, they upgraded to 30 unsafe, so that I think is a closed-end fund if I'm not mistaken. McDonald's, as we all know, raised their dividend to $1.67 per share per quarter, 2.69% yield. Northern Trust, they downgraded from 85 to 80, so think about that if you have NTRS. I like the anchor, though. I wonder why they have that anchor in their logo. This I didn't really catch about. Maybe someone can fill us in quickly about the massive cyber attack on Clorox's tech systems. Let us know about that. I sold out of them a while ago when they spiked, and then they refreshed their outlook on Ares Capital, ticker ARCC, which I do hold quite a few shares. And for you, my friend, talking about Coke, I wanted to show you something real cool with Coca-Cola. Currently 3.46% yield, so not bad at all. But as we were talking about me needing a new laptop, which I'm going to get. Everybody, Black Friday deals are coming. This laptop I have is old. It's got a Intel Core i5 9th generation. As I've been recently told by Gunny, by Mike Cowley, who was on, I did the chat with, he said, that's ancient, dude. He's like, you need to upgrade for sure. So that's why these pages sometimes don't load like that when there's a lot of data and I'm streaming. But either way, I'm going to get a MacBook. I'm just going to do it. But slow dividend growth lately for Coca-Cola, 60-year dividend growth streak. Yes, they're a dividend king. They've been raising it 2 cents 2 cents a share for a little while. But yep, looks like a good buying spot, honestly. 19.6 for their PE, which is way under the 5-year average of 24.2. But what I wanted to show you was check that out. They kept the dividend intact. This free cash flow payout ratios, we just tied this into PepsiCo. So same thing. They had started creeping up in 16 to 93, 119, then 109. They started coming down 81, and now we're low 80s, high 70s. So that's what I'm looking for with PepsiCo. I'm not terribly worried about 1 or 2 years that elevated free cash flow payout ratio, but it's got to start coming down. And this is Coke. I haven't dug into them in a minute here, but yeah, free cash flow per share stabilized. It's definitely up. This is why it's good to look back 10 years, because they were at $1.80 in 2013, $2.47 now. So at least that's higher. You want to see that higher. Yeah, look at yucky sales growth from 2013 to 20, and that's probably why that payout ratio went so high, because I'm guessing the free cash flow, right? Did I skip over that? Free cash flow per share, exactly. So there you go. They had a dip in their free cash flow per share in the mid-teens. So that's one thing we got to look at. And again, they recovered from it, so PepsiCo can recover too. Yeah, total sales, there's that dip. But still, look at $46 billion in 2013, $44 billion now. So over 10 years that they've actually lowered their total sales. Not good. Shares outstanding has been basically flat. But that is Coca-Cola, and let's see their debt. Yeah, 50%. So Pepsi was what, 63, 62? So very interesting for Coca-Cola. Could be a good time to buy, man. Could be a good time. All right, I'm going to get touched. Yeah. What? I'm going to get touched with you guys? No, I mean, somebody get back in touch. Here, if I have gains on Pep, I may want to sell my Pep and see if they improve. Yeah, that's, I'm going to think about it, dude. If I sell them, it's likely not going to be until next year. Trust me, it's not going to be a rash decision. I'm going to be watching that free cash flow payout ratio and the trailing 12 months, and I want to see it start coming down and not going up. So, Benny, you just added more. Oh, and Vici, myself as well. Love the higher yields and Vici's last increase. Yeah, I think Vici looks great. Their management has never sold any stock, so that's really interesting. None of the insiders have ever sold, from what I last remember. Yeah, I need to do that, man. We were talking about meditation, so I need to do that. Oh, dude, Ivy, I know you're not my daughter, Ivy, right? 'Cause if that's you, we're planning a trip, so we're talking about going to Boston, going to Beantown, checking out Beantown and Salem. I understand there's a train that goes from Boston to Salem, so we want to do maybe in the spring. We're looking at that. Shout out to all of you that are out those ways and those parts. Yeah, PepsiCo is too big to fail in the consumer staples. That's interesting, and very honestly, probably so. But they won't fail. But if it came down to it, they're going to cut the dividend. If it means things looking bleak and dark, that dividend's getting cut. They don't care about dividend king status or anything. The survivability of the business is first and foremost before that dividend. All right. Sorry about that if I just whistled in yours. What's going on with football, man? It's football games have started, right? Do I own any Fastenal? I don't own Fastenal outright. I do think they're in SCHD, though, right? I think they're part of SCHD. So outright, I do not own them, but I know I do have exposure inside of a fund, which is the cool thing about funds. You still get some of that exposure. Interesting. Pep can use its cash to smooth out earnings. And yeah, that's kind of interesting that their investor relations, how they said that core earnings per share is 70%, the payout ratio, so they're not worried. But still, that free cash flow payout ratio, man, that's not sustainable. I mean, that's just one of my Harsha. How do you feel about UTS? Wait, the upcoming consumer fast-moving company growing well. Let's see, trading at a discount. I've not looked at them. I know Ian, my guy Ian Lopic. Lopuck. Ian Lopuck. Let's take a quick peek at Utz and see what is the deal with Utz. Utz. I don't really eat many potato chips. I like popcorn. I'm more of a popcorn guy. And tortilla chips sometimes. So this is what I'm talking about. Things take forever to load on this, but I was taking a drink there. Utz. Borderline safe, 1.86% yield. Low yields are not anything to sneeze at if they're growing. Cap company. Let me see that. Yeah, look at dividend growth. Been looking nice. And they're about getting ready for a dividend raise here. Probably their next one might be a raise. Yeah, 1.3. So dividend yield 43% above the 5-year average. 4P of 20, and they are also at the bottom of their 52-week range. $12 that have been as high as 19. And so yeah, look at that. Interesting. They actually had a negative free cash flow payout ratio. Yucky, but 51, 15. So yeah, that kind of worries me right there to go from negative 10 to 54 to negative 107 to 51 to 15. So and then exactly there. It's because their free cash flow per share is it's like a jack-o'-lantern, you know. Sales growth. Yeah, I don't like that. I don't like the sales growth. Look how it's been stepping down. Earnings per share growth, obviously we know that can be manipulated. And slowly buying back shares. Yeah, they just went. It's weird they showed 2018 because I know they IPO'd not too long ago. But yeah, I don't know. I know Ian likes it, and I'd be curious to hear more of his opinion on it. But just from me looking, without digging in, just looking at these 10-year trends, yeah, I don't know. It's not for me. It's not for me. But I think you said you wanted a valuation, so I'll do that for you. For let's see what they give here. I'm sure they're going to say it's undervalued, but you never know. Spinning wheel. Here we go. Load it up. Load it up. We need a loading song. Here you go. You can do it. Hey, there it is. So Alpha Spread, their opinion, $24 on the base, $20, so 41% undervalued. And I wonder if they've been buying shares, everybody. They have a little bit. Last, Dylan Lissette bought shares on June 9th at $15. But other than that, 55 sales, 21 purchases. So there has, Dylan Lissette. Well, that's interesting. Got Dylan Lissette as the CEO on December 7th, 22, but they list him as a director. So maybe they had a new CEO, I guess. I don't know. Anyway, that's Utz, everybody. Now I get to see. Yeah, I don't know. So Harsha, I think that's right. I'd stay away from Utz. That's my opinion. What do I know? I can buy. Yeah, you can always, and they always say you can buy back. No. They always say that you don't have to make your money back the same way you lost it. But yeah, I'm not down. I don't think I'm going to be. I think we'll see if the 10-year keeps going up. I think more of the bond proxies are going to get hit. But that's kind of the beautiful thing about dividend stocks, right? Don't you think the same thing that as they come down, the yield goes up, which makes them look more attractive to people that have a long-term mindset and maybe a little more risk taking, Yes, we know. Ray, you're buying O & Co. A bit low on cash. Dude, you got to get that dry powder up. I got to get more dry powder up. Same thing. We never have enough money to buy what we want to buy, right? Right. So get more money then. That's more for me. I'm not telling you get more money. My ultimate goal when I meditate, as of right now, I've never really done it. It's just to calm, I guess. Peace. A little bit more of a peaceful mind, just to sort things out. I don't know. That's what I got to figure out. It's a skill. Ruby Manuel, what's going on, Ruby? Thank you for dropping on in. I do appreciate that. We appreciate that. Oh, you guys were talking about, yeah. slow down racing thoughts. That's exactly what it is. As I'm talking to you guys like a little bit ago, like it's the craziest thing that I'm 45. I've never really dealt with anxiety or stress. So there's something there that my body or mind is a tricky thing. Is being like, hey, dummy, you're getting too worked up. You're taking on too much stuff because I'm like, I got to do this. I'm like, this and this and this. And there's 50 things that you know what I mean? I'm like, for today, I probably have about 72 hours of things that I'd like to do in 24 hours, and I need to sleep. So it's like, I don't know. That's just me. That's just me. I think you asked me about this before. What will she do? She's not going to know what to. She actually VTI or VTSAX, just total market index fund. She's not going to research companies. She's not going to, look through financial statements like us and try to pinpoint the best dividend growth stocks. And no, it's just VTI, VOO, one of the Vanguard funds, maybe SCHD. That's a good point, man. I really should write out some instructions. Why did they split? Who did they split? I think we were talking about UTS. Did I say split? I meant IPO. No, not IPO. SPAC. They came about through a SPAC. UTS did. Yeah, I should listen to more music. Thank you for that. Needing a laptop for you. Yeah, but you're not like creating content and doing live streams like I am, so it needs to be handled and taken care of. Fast Eddie, you have a joint account with the wife. The wifey, she is to log in once a week. Interesting, but it's hard because if they're not into it and they don't want to do it, then they're right. I think that's the cheat code to wealth, everybody. For the 43 of you listening, here's the cheat code to building long-term and sustainable wealth, I think, is automation. To automate, I think that's the cheat code to building wealth. So just simply, we have a travel fund that we started with BMO Alto. It's a HISA, high yield savings account. And we're putting in $150 every Friday. And I forget about it. I completely forget that it's there and that it's going. But I mean, it's amazing in a few short months how much it's grown. And you automate. I think automation is the key to building that long-term wealth. And the more things you can automate, the better. So for her, I would be like, money goes into the account and just goes into VTI or VTSAX, depending on where we have it. SCHD, turn on drip. You don't have to think about it. You don't have to do anything. And I think that's the key. I think. Could be wrong. It is possible entirely that I am wrong. So. And 100K is always wow, 100K is an emergency fund. So would you ever consider putting that into a 10-year treasury? I mean, there's no risk to the capital, and with that, right? I think at 5%, that if it was 5%, the real yield will be about 2.5% after adjusting for inflation. So what would you think about that? With 100K, no risk to it, 2.5% a year. Paid out every 6 months? I don't own any treasuries, but I think, right, they pay out every 6 months. So if you guys have any questions, let me know. Let me know what your hey, Star Helix. Very cool name. What's up? I haven't seen you before. I remember most of your names. You're all like just good friends. So most of your names I do always remember. It's the weirdest thing. I do. Is the management selling shares from Pep? Let me look with that without. So with a lot of these big companies, they get so many shares gifted, and I guess I could show you guys as that's loading up. I'll bring you. Tudomi, since you asked so kindly, let's show you what PepsiCo has been doing with the ownership here. No buys yet. So watch this transactions. It's going to be a lot. Yeah. 239 sells, and 6 purchases going back to the data that they have on Alpha Spread. And let's see the last purchases. Oop, I want to do this. Purchase. March of 04. February, that's the last time an insider bought. You got to wonder why. February, this, I don't remember if this is open market. So I'll run over to CEO buys. Watch this. So February 27th, $75 a share looks like the last one. But as far as sales, March 9th, 23. So let me close this and go to ceobuys.com. If you haven't checked this site out, it's interesting. You can look up any company, and as they put it, it shows this is when CEOs buy shares of their own companies with their own money. So it's not, where does it say that? Down here, I think. It says it somewhere. No gifts. No, here. Browse all buys. This is an interesting one, and you'll see me tweet stuff. Yeah. We only show you when CEOs buy shares at market price. No bonuses, no stock options, no gifts. And I don't think any of these are. Oh, ED, that's Con Ed. That's interesting. They've been buying their own stock. So we'll throw Pepsi on here and see if they have any data for that. But skill, I thought there was one. Orc. That's here. Yeah. So ADC, you've heard me talk about Agree Realty. If you click on that, it'll bring you to the SEC Form 4 where they have to disclose all that, where they got the information from. But what are we looking up? I want to look up PEP, see if PEP comes up. None. No results. But I think like Vici does. I don't know why Realty Income would. Yeah, so last time Ed Petoniak bought was March of 2020. But they have never sold any shares. I'll show you one thing here that's pretty cool with the Vici. With the Vici. I thought I'd look them up. At NVIDIA, Vici. Vici. I came, I saw, I conquered. I'm stalling. Needed World Sync. Get a new laptop. $44. So 36. So they say they're about 21% undervalued. But check out the ownership here. No sales, transactions. Look at this. I'm going to make that bigger. Look at that. 34 purchases, 0 sales. So there have been, it's been a minute since they've bought, but there have been no sales by insiders of Vici. So that's kind of cool. I don't think I've been sharing any of this. Awesome. Well, guys, I hope you at least heard me say that. I talked through it. You know, and I got my phone right here. Look at this. I got it plugged in right here, watching myself, but I didn't even look down and see I'm not sharing what I'm. Hey, you know what? It happens. I'm a fallible human being, you know. So I'm sorry about that, not showing that. Hey, Drake, I haven't seen you before around these parts, friend. 315,000 people. Yeah, their jobs matter. Agree. I agree with Joey. Agree buying shares of Agree Realty now. So the Pilly, this guy's corny as hell. Yeah, Fizz, what's up, man? We all had a rough week, and as some of you may be joining in, one of the things that I was talking about, you can go back and watch the little presentation, which I thankfully didn't muck that up, just like I did not showing people. But we as the Treasury yield started going up in late July, early August is when Pepsi really started coming down. And as that yield starts climbing more on the 10-year, PepsiCo really started taking a nosedive. So I think they're intertwined. I think that is one of the things. Pepsi needs to pay a mountain of debt. Yep, I know they want to acquire Celsius, probably one of the worst kept secrets. You know, they want to, and that may be something they do. Is Celsius has gone, right? I think Celsius has, I'm not going to bring you guys with this, but I think Celsius has dropped precipitously in price. As I'm looking, and it's coming. I'm just going to tell you, they have indeed dropped a little. I'm looking at the wrong thing. I think I'm looking at the Celsius token, for Christ's sake. What is their ticker symbol? CELH. I'm like, dude, Celsius is 15 cents a share. I'm going on a buying spree. So Celsius was as high as 205. They're down to 154 now, but they still got to go lower. So, yeah, Cody, what's up, buddy? What's up, man? It's all over. You're right. No more. Well, we'll see what they do. There's probably always going to be people overweight, but I don't know. You did well. Hold on, not additional stream. I'm not going to go on tonight because, like those of you joining in, I have a my wife's uncle passed away, so we have a wake tonight and then a funeral tomorrow. So I'm not going to be around tonight. So I wanted to still share my thoughts on PepsiCo, what I'm thinking, and again, I'm really considering if I'm going to sell, but I need a little bit more data before making that decision. And I need to have a clear plan of what I'm going to put it into instead. I don't want to just sell, which might not be a bad idea. Have you ever just sold a major position and sat on the cash, not really knowing what you were going to do with it? Kevin, you bought CSX and BKR. It's BKR. I don't know. I don't know what BKR is. Yeah, O's going to be beaten down for a while. They're a bond proxy. That's why the REITs and utilities, they're bond proxies. And when the treasuries are going way up, people can get that risk-free money. It's kind of a no-brainer decision that you can just get that yield risk-free. Why would you risk it on an equity that could, any black swan thing could happen and then your capital's gone? Frank, 50K. Oh, you guys are talking about that. Will, what's going on, buddy? Thank you so very much. Emoji hands. Well, I won't do it. Yeah. Thank you for stopping by, Will. I love you when you comment and on the videos. I do like that. Uh-oh. Aaron started a position in 3M and Next Era Energy. Dude, you are dumpster diving, my friend. Aaron, not afraid to get his hands dirty. Go dumpster diving. I'm a little bit more worried about Next Era. Hey, the market is telling us these stocks there's problems. Like I think with Next Era, right? It's the yield. They're a bond proxy. They have debt, and then I think maybe over allocated to the whole clean and green, clean energy thing, which might maybe take a backseat. I don't know. Yeah, so I'd say those are risky. So hopefully the risk is going to be worth the reward, man. Dude, look at this guy. Look at this handsome. I was going to say Polak. Dude, everybody knows Malczewski was my birth name, my biological dad's name. It's Polish, so I'm a ski. So it kind of reminded me, BM Lashinsky. Curious what that. Anyway, slowly consolidating portfolio in SCHD. Yeah, I've done that, man. I have done that. It's in our Roth. And I have sold positions, like all of the 3M I sold and bought SCHD. I forget what other ones. I've been thinking about Lockheed Martin, honestly, about selling my 10 shares of LMT, moving that into the Roth, and just putting it all in SCHD. But we'll see. That's something we're thinking about. Okay, I'm getting caught. Yeah, you guys couldn't see my stuff. Sounded good. Sorry. I don't know what ARM is. That's not an adjustable rate mortgage. That's probably the ARM stock. I've never looked into them really. Let's see. Yeah, again, apologies. Sometimes I'm moving. Again, I told you, I'm moving too quick, and I forget to share the screen, and already I'm away and talking, and I don't even stop to look. So, anyway, Treasury yields might be affected by the Israel situation. Yeah, man, that's... Again, so unfortunate what happened there. As I said, our friend Ari Gutman is over there, sent me a video in the beginning. I talked about this just outside where he lives on the street, and you can just hear rockets in the... I mean, it's just... Man, it is... it's a hell of a situation, and I don't know what's going to happen, but it's unfortunate that this has flared up once again. Let me get caught up to you guys about the bot. Last question you talk about Pep. When they read it, yeah, I don't know, dude. That's a good one. If I remember for the next live stream, I'll look to see when the bulk of their debt is coming due. This information is all in the annual reports. So I'm going to see when they need to refinance. And a lot of these companies, they're going to try and tread water until hopefully rates come down. So that's why I think that companies that have a lot of debt and they're going to have a lot of debt coming due before 2026, I think because of the higher for longer, that's why they've been really punished by the market, because we're assuming that before rates come down, that they're going to have to refinance at these higher rates, which is going to be less money to go back into the business, more money toward the debt. So for some of our businesses here, it's kind of a timing game. You know, if by the time they have to refinance the debt, if the rates will start coming down. So yeah, Fast Eddie, thank you, man. Appreciate it. Yeah, it's just, you know, if it can happen any day, it can happen today. And it's just one of those things we don't like to think about, but you know, we're Polacks. Nice. I'm getting caught up to you guys. I'm almost caught up. I need to get so much better than that. Here, next there is good cash flow, very high debt. Yeah, that's going to be the thing, man. I think as we go forward and we're looking at companies in this new higher for longer environment, if they have to refinance that debt and they have a lot of debt, that debt is just going to become way more expensive if they have to refinance the debt before the rates come down. And that's what the market is punishing. Some of these high debt companies or companies that are living on debt, it's going to be really interesting. I think some companies aren't going to survive it. And you are thinking about closing Kimberly-Clark, Coke, and maybe Target. I can't fault you for that, buddy. Can't fault you for that. So, you know, Target's an interesting one. I sold them off to buy more Nexstar. I mean, we didn't get time to get into that. And at this point, they're borrowing money to use for the dividends. Yeah. So, last one here. Thoughts on J&J's court case on talc powder? I haven't really seen much of that lately, but I think they're going to be able to settle it. And always remember, whatever the final amount is, it's not going to be due right away. This is something that can be paid out over many years. So they'll be okay, but still, you never want to see billions of dollars going to settle something like that. So I haven't dug deep into the court case and what's going on with it, but I think J&J is going to be interesting. And Matt, I'll leave Matt with the final say that can't have capitalism without bankruptcy. Exactly. You can't have heaven without hell. And you can't have capitalism without bankruptcy. So you are right, my buddy. So everybody, guys and girls, Ivy, if you're still watching, yeah, dude, thank you guys all so much for hanging out on a Sunday afternoon. Next week, we'll be back on Sunday evening in our normal time slot for the communion. And, you know, unfortunately, we don't like to talk about those that are departed. But like I said, it happens. And I've been with this guy since I was a kid. That's why I love ending this with my guy Pee Wee. I love that music, and it's just bittersweet, but I will be back to talk to you guys again next week. So thank you so very much for stopping by, and I will see all of you in the